Hello, everyone! Welcome back to the RationalInvestor.com's Daily Brief. Woohoo! Party! Gotta get my head on straight here. FYI, my computer is like totally limping along here. It already crashed twice today. And I really should take it in to get it fixed. It's actually getting a bit old. But anyway, I even got a whole bunch of new parts and stuff, and I'm total knucklehead. I don't know how to install any of this stuff. So, if the video does crash and the video is lost for today, I'll apologize ahead of time. Not really a heck of a lot I can do about it. Chris is over in Europe and his internet's all a mess, and he usually runs these videos. So it just is what it is. We'll try our best, and like I said, if it crashes, it crashes. It's just the way it goes. We're supposed to do a nice, I don't know, half-hour summary or so of what the heck's going on in the world and the markets. And then we will head on over to our daily brief after party, of which we have Murat on the call, our level 2 instructor, sort of co-instructor. He and Sharky are doing the level 2 program together, sort of in unison this term, so it should be interesting. And Gan, Murat loves Mr. Gan. So he and I are working away on those kind of things as well. Anyway, the point being that we had Murat on talking about relative rotation and that kind of stuff recently, and it was so enthralling. Literally like an hour, 2 hours just disappeared like that, and we had to sort of put the conversation on pause. So today is part 2 of that presentation. So definitely think that there's value added coming to TRI and being a member of the site and being able to learn from all these people. I've had the privilege to work with a lot of guys. Geez, Murat, you're on the call with me here, right? Aren't you?
Here I am, yeah.
Hey, there he is.
Hello, everybody.
You know, my favorite memory of Murat is there's a really, really long bridge that we had to cross in Vancouver. Vancouver is just like tons of bridges. And literally Murat's strong as an ox, and he like literally pushed me up the entire bridge because I'm a big fat lazy ass mother bleep 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 bleep.
Next time I will rent an e-bike, Brian.
I tell that. I mean, hey, you want to secure a place in my heart? Push me up a bridge. I tell you, that was a lot of fun. That was back in 2000. What was that? 2017, 2018, somewhere in there, right? When did we do that Vancouver meetup?
I think it was 17 when I'm not wrong.
So Murat and I have been. I've had the privilege of knowing.
No, 18.
18, yeah. Well, a long time. And, you know, he was a site veteran at that point. So, anyway, so we'll have a lot of fun chatting with Murat in the after party. But let's get on to sort of the market summary now and try and sort of at least give you an idea of what we're sort of thinking at TRI. With regard to the market, you know, if anything, I've warned people that this little window here, where you go through sort of a market topping phase, and through the market top, it's fairly easy. You just go, look, just don't touch anything. If you're long, maybe take some profits. Go and buy a Lambo with all your damn money. You know? And what's so it's tragic is that as a broker, I used to see guys do this all the time. They'd be up huge money, and they'd be long certain names. And, you know, I knew one guy used to drive me crazy. He'd always say, "Oh, no, you can never have too much of a good thing." and he, you know, the guy'd be up like tens of thousands, hundreds of thousands of dollars on a position. I'd be like, "Take some goddamn profits." No, I want to buy more. Oh God, you're crazy. Anyway, so, and then, of course, the market rolls over and you end up giving it all back, which is such a piss off. Anyway, the tops of the markets, that's pretty easy. Just, leave it alone. Markets come off. We've spent about a year grinding our way lower now, and we're trying to transition back into sort of, growth phase. Fed has come out and said, we want to put the kibosh on growth. You guys are growing a little too fast, too much inflation, all that stuff. And, when are they done? And what does the market look like? How does the market look as it transitions from going down to going back up again? And that's the phase that we're in right now. And, you're going to get a lot of people, this is the bottom, wait, straight up from here. And those people, if you look back in hindsight and you happen to be right, well, they're going to look like trading gods. But I've been at this game long enough. I often see that bottoms look like saucers. They don't really look like V's. They look more like W's. So it's usually a bottoming process. And actually, I even put out a tweet the other day that which I think really sort of summarizes how I look at the market. Obviously, we've had a lot of fun here in crypto over the past few years. I was a penny stockbroker in Vancouver, so I know all about venture cap. And to all intents and purposes, cryptocurrencies are venture capital. So I love playing in this space. But, this is actually probably a pretty good image of what my anticipation of this bottoming process is going to look like. It should look like a saucer when we come out the other side. Are we sort of halfway through this saucering pattern? As I said, 2023, if you look back on the 4-year cycle for crypto, usually this is the year where we put in some sort of base. You never know exactly what these things are going to look like. Can you make the argument that, this January price action just literally going straight up in this particular Schalt coin, is that healthy? Is that sustainable? Is that realistic? Probably not. This game is all about ebb and flow. So, if you were... In fact, I had one gentleman on the site today, he said already, just since January, his little old lady portfolio has already doubled. So... if you can set yourself up to take advantage of these rallies, quite often the rallies just come out of nowhere. Like, was anybody at the end of December saying that the whole damn market was going to double here? Not really. And now, unfortunately, you're probably going to get a lot of people on the bandwagon uber bull, and that's usually when the traps start being sprung. So, anyway... I always like these guys. I've traded this Syscoin now, like both of the past 2 cycles, and made great money on it. I don't see any reason why we won't do the same again. Just, is it realistic that this thing's just going to go straight up and constantly go up, to... Not likely. And if anything, if it does go straight up like that, then usually it actually has to come actually straight back down. And kind of like this market symmetry study, I actually expect that we're going to have to come back and revisit these lows, or at least a close proximity. I mean, I don't think the market's going to look exactly like this, but it will look similar to this. And I even put a note out, somebody just remind me, let's come back in a year. Let's come back, somebody put in a note in a dialogue. Next January, or, maybe even beginning of February, poke Brian to pull up the Sys chart and let's see how his market symmetry study did versus reality. So anyway, there's your sort of backdrop. If anything, I also put out tweets this morning. I'm a little bit worried about Chair Powell and I like this. This resonates with me. I think from now on I'm going to call this the FUMC, because really, these people, they do not work on our behalf. They don't work for us. They actually work against us. Remember, Jerry's number one priority is to serve the banking class. You have to understand, Chair Powell and all that bullshit. People seem to warm up to him, but you have to understand... who does Jerry actually work for? Jerry works for this jerk. Now, you could label him Goldman Sachs. You can label him Wells Fargo. You can label him Joey Diamond. Whatever you call it, you have to understand these are the people that Chair Powell works for. He does not work for the American public or anybody else in the world. And you know what's really sad is I saw like the American protectorates like Puerto Rico, American Samoa and stuff, they were pleading for help in that 2008 financial crisis. And he's like, well, you're on your own. I don't care about you people. So just remember that, okay, everybody? I mean, I find it interesting, and I don't know whether it's a commentary on the sexist, but I did find it interesting that the ladies that were interviewing him all warmed up to the Chair Powell. Oh, Chair Powell, I want to have your baby kind of talk. But he doesn't work for any of those kind of people. He works for these people. And he's even publicly said, I am planning on bringing pain into your life. So, anyway, that's probably more rhetoric than anything else. So, interesting today. You know, this actually aligns nicely with what Chair Powell has been saying here recently. Is, Econs. He has been saying explicitly that he sees disinflation. Notice, not deflation. They're never allowed to use that word. But he sees disinflation in the goods part of the market. And I gotta say, man, holy moly, did we ever get a big whack of disinflation today in the commodities industry. This is your commodities market. And these markets are getting smoked. And the thing is that this is exactly what's supposed to happen for the next 10, 15 years. The process actually started, believe it or not, in 2018. So we're now technically 5 years into this growth cycle. And, the commodities are just getting obliterated here today, which I find fascinating. I don't think anybody was really expecting that out of the gate here this morning. Look at that. We got the gold down $52 an ounce. Kaboof. Actually, probably the April contracts when we look at $54 an ounce. I mean, where the hell's the bottom on this darn thing? That is one nasty failure. Huge breakdown here. And what's super cool, and I don't know whether we did this again, another excellent reason to seriously consider joining our site. We had on a site member, Julian did his baby powder report yesterday, and he had on a site member, I think his name is 1075, if I'm not mistaken. I think that's his birth name, if I'm not mistaken. Or it's Effie or something like that. Anyway. And he was telling us about how he sold all of his gold. He was actually pretty bearish of gold, but then he saw this bottom come in, and he's like, well, that's a W, and that's everything that we learn at TRI, so I might as well go buy. And then just last week, he was like, this is getting ridiculous. 8s and 9s on the Tom DeMark, divergences, RSI overbought, Willie stupidly overbought. And he said yesterday he informed everybody that he was liquidating his gold. And I think he painted a target. He said, probably in the near term, I'll think about buying the gold back. There to there. And clone that down in that area. It's like, wow, really? Yeah, what is that? $1,500 an ounce. Kaboom. I don't know whether I necessarily have a trade set up that would actually trade that, but if the market did ultimately work its way down into there, keep in mind the Fed has cranked interest rates up dramatically. So they have put the kibosh on the inflationary pressure. The question here is, these goods prices. I don't know whether, I don't think we go straight line down there. But I wouldn't be surprised that by the end of this money cycle, keep in mind the Fed has interest rates probably too high now because they always overdo it. They always go too far. They always do too much. So it's just the way the Fed does the way their business. I'm not making any grand predictions here or not, but I did find it interesting that if we ABCD that out, it does come down to some crazy-ass numbers to the downside. It's probably a little bit too much, but anyway. Point, I suppose, in the short term is I was quite shocked at the amount of carnage that's being done in this gold market here. That just looks insane. And the crude oil market's coming off here a chunk. And the interesting thing with crude is, people don't even remember this. Just a couple years ago, when the interest rates were fairly high and the economy was contracting because of the sickness, scamdemic, whatever the hell you want to call it. I mean, crude oil was trading at like minus $30 a barrel. Could crude oil go back down to $40, $50, $60 a barrel? Thought it was interesting. I was listening to some guy yesterday who's not really a trader, more of like a market commentator. And he was suggesting that the Russian Urals crude oil contract right now is actually trading at about $60, $65 a barrel. So could this thing play catch up and match that price? It wouldn't surprise me. So commodities getting smoked here today. Absolutely smoked. I always say, and this is a good reference piece for you, if you ever see the market move more than 2% in any direction, then the traders themselves start to pay attention. So you can see we're at like 3% here on the gold market and 2+% on the oil. So the traders are starting to pay attention to that price action. Actually, I haven't done one of those Rumble videos, the weekly commodity trend survey videos. Maybe I'll do one of those over the weekend and go through the commodities again. It's been a while since I've done one of those. And interestingly enough, we've been sort of chattering, how long is it going to be until we actually see the US dollar start to have a bit of a counter trend rally? And it looks like it's finally starting to happen. And this is an interesting commentary too, because technically through the greed cycle, we should see stocks and growth assets do well in the US while the US dollar index is rallying. Well, how's that going to happen? Well, the only way that's going to happen is if the United States of America is the economic engine is at full tilt and the economic engine is rocking and rolling. And remember, I alluded a couple minutes ago to the fact that your pal, our buddy, said that I am going to give you pain in your lives. And we are starting to see the disinflation in the goods part of the economy. That's all these things, all the commodities. But we haven't seen the disinflation that he wants in the labor market. And interestingly enough, what's the headline today? U.S. economy creates more jobs than expected. U.S. economy added 500,000 jobs. And this is interesting because it has been probably a good, I'd almost say like 2 decades since I have seen these kind of employment reports out of the United States. In fact, probably, I'd even be willing to bet that none of you watching this video can remember the last time you saw a monthly jobs report of 500,000 jobs out of the U.S. But this is what the U.S. economic engine coming back online and kicking ass looks like. And this is basically the hallmark of my whole fear, greed, 17.5-year, generation, 35-year, totally. That whole cycle thesis is exactly around this. This is the part of the cycle where you are going to start to see the U.S. economic engine coming back online and really kicking some ass. So I thought that was fascinating. It's happening. The coming greed cycle, everything is falling into line. And then, the interesting thing is cycle people were like, okay, we should look for a top. And I often tell people, like with technical analysis, we kind of have a crystal ball. But the crystal ball is kind of cloudy. It's like, you can see what's going to happen, but you don't know why. So I might argue that along with the sickness, along with the change in the interest rate cycles, along with totalitarian dictators being typical totalitarian dictators, and eventually showing their skin. I mean, it always seems to play out this way, that eventually totalitarian dictators end up going on some tyrannical rampage and murdering, hundreds of thousands, if not millions of people. It's so sad, this human's existence. So, what is the reason you want to give? I think probably most people looking back over time will say, well, this is just simply nothing more than an unwinding of the globalization movement, which really was, well, the U.S. was going through a really bad demographic cycle, and basically the world economy had to take over the reins as the U.S. sort of structurally fixed its imbalances. Now those imbalances have been fixed, got a whole new generation of people coming online into the workforce, and then couple that, we have a whole generation that's now comfortably into retirement, and they're out of the equation, and here we go. So it's super cool to see these cycles play themselves out, and you fill in as we go the sort of reasons why this shit happens. It's really cool to watch. But the long and short of it here is, I am a U.S. dollar bull. I am a U.S. economy bull. I think that the international economy and Winnie the Pooh nonsense is yesterday's story. If anything, I wouldn't even be surprised if China eventually ends up deteriorating into some massive civil war. Vladdy over there is completely screwed Russia, but I've talked to you guys at length about commodity countries. We are no longer in a commodity cycle. We are now in a greed cycle, a growth cycle. And you see what's happening to substitute drama teachers in my country. I mean, it's pathetic the way the guy he is instituting Canadian underperformance for literally the next 20 years. And there have been a lot of economic think tanks that have come out and said that the policies that this idiot is putting into place are literally going to make it impossible for Canada to outperform. I mean, I don't understand how somebody coming out of high school today in Canada can even conceive about owning their own home. You can't even visualize it. It's impossible. So anyway, long and short of it here, the cycles are all playing out, and I am uber bullish of the United States of America right now, which is so ironic. And also too, it's fascinating. We have guys like Trump, who are kind of very polarizing people, but the policies that Mr. Trump put in place actually have set the United States up, competitively speaking, to just kick the world economy's ass for the next 20 years. And that's exactly what's going to happen. So it's remarkable to see. Anyway, wow, there was a whole rhetoric for you. So long and short of it here, big econs that came out today. That was the whole point of all that rant. Were the non-farm payrolls came out staggeringly higher than expected. But the irony of all of this is that the United States can now justify higher interest rates. The economy's booming. Mr. Powell specifically said, look, we've got the goods prices under control. Now we got to somehow get control of this worker inflation problem. And usually worker pay goes into about 2/3 of the inflation equation. And he's even said that, well, we're starting to see the disinflationary forces taking effect, i.e. the goods prices are coming down. Now what we need to see inside of all of this is we want to see productivity ramping up, and we want to see things like average hourly earnings and stuff calm down. You can see we're still running 4.4. I think the market, it'll probably get happier when we're back down around 3. You can see month over month through 0.3 annualized. That's 3.6. Participation labor rate, that's pretty good. I mean, we probably want to see that start ticking back up as more and more workers come back into the fold. Interesting how this is primarily being driven by the private sector as well, which is another good sign for the internals of the economy. The sad thing about a country like Canada is something like 50 to 60% of the entire country derives its income in one form or another from government. Now, government doesn't do anything. In fact, government is a leech. And, if the government doesn't produce any goods or services, they're just there being substitute drama teachers looking like, communist fucking ideals. Oh, let's create another $500 million government program. Where are you going to get the money? Well, just turn the printing presses on. That's how we'll get the money. Boom, up goes price inflation, blah, 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 blah. If you, however, have private sector come in and say, well, we've got the private sector is hiring all of these people, all this economic activity. They must be doing stuff. They must be making stuff. They must be doing services. Goods are being produced. That's what you want to see out of an economy. And ironically enough, at the end of the day, that's disinflationary, not inflationary. So it's actually good. I mean, government payroll's still pretty hot. And of course, socialist Joe Biden, he'd probably endorse more government. But if anything, what you really want to see is you want to see these private payroll numbers ramping. Average weekly hours worked ticked up a little bit. So, on balance, that's relatively okay. Does the Fed, what we really want to see here, which will really make the U.S. dollar and the U.S. stock market just rocket, is let's keep an eye on productivity numbers coming down the pike, right? If the economy is booming, what we want to see is we want to see more productivity. So we'll keep an eye out for that. Now, other econs that hit today, this is probably talking a little bit more about sort of, what is the state of the economy itself? Is it contracting? Is it expanding? You can see that the global services, I'm not quite sure how you actually tie that in, the word global in there. 46.8 came in slight uptick, so that's better. I know reading above 50 means we're back into sort of growth phase. Interesting non-manufacturing. So keep in mind that the United States has a lot of baby boomers who are all in retirement, and they want their manicures, they want their pedicures, they want their Ubers, they want their, Door Dashes and all that. That this services economy is very, very much alive and kicking. Non-manufacturing new orders, 60, so well above 50. Non-manufacturing prices, this of course is one of the problems the Fed wants to try and get control of. So interesting to see services sector doing relatively well, and on balance, they're not. If anything, what we really want to see is we want to see like W's start to form here. Interesting. So we do have higher lows. And notice that if we get a print above 50, which means economic expansion, that's going to be a big old honkin' W. And if that happens, oh boy, did anybody take a look at what the price action in January did in the stock market? The January barometer is slightly bullish. And it's fascinating how a guy like Larry Williams, who's like 80 years old, and he's like, I don't get into all that nonsense and short-term stuff. Larry's been extremely bullish, and his impression is that the Fed has kicked the inflation problem right square in the nuts, and things are rocking and rolling. Let's see how Larry does. I think he's onto a good tone here.
Coming up on 40 minutes, Brian. FYI.
Yeah, I don't know. I mean, what do you think? Was that a good rant? I don't know. I had to get a lot of
pretty heavy econs day, so I think it was.
Yeah, I mean, it's pretty important econs too, eh? So
yeah.
Anyway, so you can see the long-awaited. You even heard Julian yesterday going, "Where the hell is this goddamn U.S. dollar rally? What the hell's going on here?" Anyway, we're finally starting to see a bit of an uptick. I don't know whether we have to come all the way down here. I don't know. But if we did actually start to pivot back up, interesting too how we're right up against value high here. So this is a pretty important battle zone. But anyway, we won't talk anymore about that. Other things in the market, I'm noticing there's a lot of stocks that are starting to look very, very W-y. I mean, look at that damn chart. And if anything, I'm a little pissed off this thing's running away from me. And there are a lot of stocks that look like this. I did actually go and buy this one. Beautiful. This one the other day happened to have just a really nice weekly outside-upside key reversal, so I just went and bought that. You can see the volume is ramping up here, so that's good to see. Momentum is ramping, but it's all over the damn market. You're seeing these. I mean, look at that chart. That's ridiculous. And if I'm not mistaken, Murat, are you still here? He had a bunch of names that. Yep. What was that one that you were barking about just before? We'll talk about it in the after party.
I had several ones.
Wasn't it Canoe or something like
Canoe,
that?
yeah, it was double O. It was double O.
Double O, is that the symbol? O-O?
No, C-A-N-O-O.
C-A-N-O-O. There you go, Canoe. I have no idea what the heck this thing is. It looks like, look at that OBV. Oh, Jesus. Willie's nice and stupid. This is a weekly chart, right? So you can see, and if anything, Murat is Mr. Relative rotation. What? No, that's not what it's called. What is it? Relative rotation? Something like that.
Yeah, it is relative rotation.
Okay, cool. I did remember it. And there was one name in particular. It was a European stock, so I couldn't buy it. But this was the name that Murat told us about last time he was on the show. And I mean, look at that thing. It's just slowly doing its thing, climbing the wall of worry. So can't wait to hear what Murat has to say. Of course, also, too, communication services. This is the most beautiful weekly W. Our level 3 instructor, Zach, he is becoming an absolute options wizard. It's awesome to see. I'm so proud of you, Zach. So proud. He identified this as not only, in the level 3 program, we talk about, we do some advanced concepts, sector rotation, seasonality, and this thing it absolutely lined up. Effie yesterday was talking about how communication sector should outperform here based on what we saw out of the first 2 weeks study. That's the sector rotation stuff. And look at that thing go. And, why is it doing this? Well, one stock only. Kind of pisses me off that I left this one, because I was looking at it for the longest time going, this thing's it's being basically thrown the baby out with the bathwater. And look at what it's doing now. Holy crap. So, too late. You can't buy that now. Don't chase. But if anything, I did load up on this communication services for my retirement account. Beautiful looking chart. Absolutely beautiful. So, you can see growth is starting to come back into the market. Of course, that leads us finally to crypto. As I had said earlier, I was exceedingly pleased to hear some of our real pro traders. One gentleman in particular has said in the public forum on the site, our chat room, that his account's already doubled since the January lows. This is a name that I was touting, but interesting. So notice the January, look at it, it's just straight up. So pleased to see that. Of course, Zug. This is actually it. Zugi's not only is he giving me kick-ass ideas I bought down here thanks to Zug, he's also the responsible for bringing Chris into my life. So thank you very much, Zug, from both fronts. And he would like to participate. Hey, Zug here? Oh, Chris. Yeah, Chris. There's Chris. Give me a woohoo. Give me a Zug-hoo.
Woo, Zoogs.
There you go. So the point being that we're having a lot of fun. Have I told you about this Julian guy? These crazy Romanians. They're insane. I think Julian now is not only is he getting doubles on a daily basis, I think he said he got 2 or 3 doubles off on one damn day. It's just, maybe it's getting a little blow off toppy, I don't know. But there was one chart that he posted in the lounge the first thing this morning, and I was like, Jesus H. Christ, you're on fire. Look at this. And this is the way traders go. And, we want to teach you the basics of how to make money from trading. then it's entirely incumbent on you just to go out there and apply all the principles that we teach you. And look at what he's doing here, the crazy ass motherfucker. Nice job. I gotta make this guy famous, man. He is just kicking it. Let's see what he looks like. Hey, Julian. Oh, what a handsome guy. He's just a young guy, too. Jesus. We're gonna turn him into, Julian, I want you to be shopping for Romanian real estate for me in Transylvania. I still want my Romanian castle. I want to be Beamer the Impaler. No, that doesn't quite work. Anyway, so our Romanians, man, they are just on fire right now. Anyway, so be it stock market, be it cryptocurrency market, you can see growth is coming back, and it's coming. Excuse me, it's coming back hard. Suppose I should finish off. Always a good idea. Just take a quick boo at the corn. And then we'll head on over to DB Afterparty chat. I don't know where I had it here. Maybe just give me a second here. I have sort of like a default chart that I've been talking to you guys off of for the corn. Here it is. Interesting, the corn, I mean, it's trying to get going here, but we're at the very end of a very long move, I think. I mean, it started there off of this W there, basically the beginning of the year. And this is so cliche because, Bitcoin is basically venture capital. And like literally January 1st, you guys have all seen, the Benner cycle, 23 bottom, all that kind of talk. So I think that the people in the know kind of were foreseeing that, hey, market's going to start coming back and, venture capital, which I think crypto really is, should outperform. I mean, yeah, you see penny stocks, usually outperform on the upside. And they underperform on the downside. It's just the way the market goes. So, I'll keep these bot setups in mind. Maybe we need a little bit of a pause. But considering, market just feels very strong here. I don't really have an M top. I can't come in on the buy side up here. And kind of like what I showed you with Zug's names and Julian's names. Or Julian. There's no way I can buy this stuff up here. If he's banging out doubles, that means he's selling, not buying. So, congratulations to those people that did come in off the bottom and you're banging out doubles like a rock star. Where exactly the top is, I think it's somewhere up in this resistance area. As Julian pointed out, still have a few liquidity pools. There's one more big one floating out here. And this is also a significant low to high trend line as well. So a lot of institutional people will be watching that line. And then also too, fog and bombs. We have this 4669 way up here. I would just simply say that don't be shocked if you see a top come in through this next sort of couple weeks, if you will. Indicators, there is no change. And interesting enough, Willie is still stupid. Yes, we're just sort of grinding away here, but this is not a market I can get aggressive on the buy side. MACD is still painting a bearish divergence. If we can start getting W's, and you can see RSI is trying to W here. We never really got a real ramp up in selling volume here, so I actually think everybody's kind of just on the sidelines sleeping right now as the market's drifting. And in that kind of environment, the little names can usually do pretty well. So had you the gumption to step in on the long side down here, I think you're getting paid, right? Be like the Julian. I'm not quite sure if I'm supposed to pronounce the J or not. And there are a bunch of names that I have on the books that I see are moving up. I don't know. If they double, fine, great. I'll let half go. There are a couple I'm being a little bit greedy with. I was quite pleased to see things like sushi, which I had to take a lot of heat off of. No, back in the money. I mean, geez, look at the money pouring in. CZ's probably feeling pretty good right now. And as I pointed out earlier, names like Matic are just kicking it. So, on balance, feeling pretty good about trading and making money from trading and seeing account balances go up. But at best, I think there's a couple like Digi, for example. I'm more than happy to come in and start buying. I didn't buy this guy here on the way up, so I do have bids working. You can see the double bottom down here. And if you just, like what I would suggest to people, although it's very boring and it's not very sexy, but you just simply draw your reload zones and you're just going to be shopping, waiting for those pullbacks. And it might take a few weeks, might take a month, might happen tomorrow. I don't know. But can't chase. Just not allowed to do that. Okay, well, there's your summary. It was a good half hour, 40 minutes or so. I suppose we'll see everybody for broiler chickens on Sunday. And now let's head on over and have some fun with Marat and talk relative rotation. And maybe he has a GAN treat or two for us in store today as well. All right, have yourselves a great day, all you public people. Come on over. Hell, you can participate with the Marat call. I think we do like a 30-day trial. If you want to sit and listen and see whether kick the tires, see whether this place is worth joining. Love to have you on board. You better hurry because he's going to be talking pretty soon. Other than that, all the best. PMA for the win. The only thing left for Brian to say is bye for now.